morning, everyone. Just wanted to get this out a little bit early this week so everyone would be on tap for what I'm looking for. Just a little update on the war over across the pond in Russia, between Russia and Ukraine. Russians are now launching their offensive airstrike using their hypersonic missile and taking out high-value targets. I believe they're going to take over the Donbass and that Russia is going to win this thing. They're going to move into the main city. And I think Zelensky is gone. Pretty much the way I see this ending up. I don't see him escaping. Probably gets killed. I don't know. But nonetheless, this country is going to fall to Russia. Russia has the upper hand. They did not get enough ammunitions to Ukraine, so be it. I think this is going to have an effect on the markets, but this is what I'm looking for moving forward. I am seeing here on the NASDAQ it tightening up for a breakout. I have a level, two levels. I have 13,391 and then I have 13,560. We come up here and we hit 13,560. I'm out of the markets. I could see that as between 13,560 and 13,700. Those could be big turning points. If we look out on this chart, I'm looking for something like this. So up here at these top levels, could go higher, but I'm just seeing too much turmoil, too much. I don't see enough liquidity coming in to push this thing out really hard. Now, that could change in the next few weeks, but I do see a lot of geopolitical black swans possibly developing. And we still have our domestic black swans that could happen as well with the banking system. So all of that is pressuring on the markets and their underlying pressures. And I believe that those will raise their ugly heads first before we get any liquidity coming in, which would push this market much higher. Remember, we're still in a bear market bounce. I have been bullish since October simply because we've had more liquidity, but I'm beginning to see those liquidity flows dry up. I don't see any new changes coming in that would produce liquidity. Everyone's actually contracting and lending. And so if you have a big contraction in lending, you would actually see the opposite. And as we move on here, you're going to see volatility at very low levels where we could begin to see that start to rise. That signals risk off, and that's going to be even less and less liquidity. So we're going to be looking at these things as we go through the charts today. But this is the first one I wanted to look at, is the NASDAQ and where it's at and what I expect from it moving forward the next week or two. But I do expect to hit that target here in the next week or two. One of those two, these are the two big ones here. Again, 13.56, and then this one up here, which is 13.7. Those are the two targets I'm looking to hit. So be aware of that moving forward. And then I'm going to stay high and dry out of the market. Let the market show me its next move. If it goes up higher, it has to break this level here at 14,060 for me to start taking interest in it again. So that I'll be waiting for that level to be broken. But if it's not broken and we break below these highs here and we start to pull back and then continue to break lower, that's going to be a signal to me to enter into a short position. Next, I want to move in over to oil. So we see oil came up here, hit the top of our channel. We had a pause there. We were looking for somewhere in this area for oil to turn over to take a trade. It broke through this support level, back through the 200-day moving average. We are short oil right now. Our stop is placed above this level right here. We are still looking at a higher move of 85 as a possibility. So we're in this trade short, but we're not super committed to it yet. I would be more committed if it came up and hit these higher levels and then rolled over. But we need to take the short here now just as a precaution to see if this rolls over here. But our stop is relatively small on it. So we're looking at something like this. I'll just put it up so you can see what we're looking for here. We're entry right here at this level coming in, and we're looking at a stop that's setting right above here. So that would be our stop. Of course, our downside potential is much further than that, but we're just going to set it right there for now, just so you can get and understand what we're looking at. If we do hit this stop, we're going to look again at these levels here. You see we have a level here at 86 and another level here right around 85. We're going to be looking at those two levels to see if this rolls over there, and that this might just be a pullback to go higher. And so we're looking at this, not really too concerned if we get stopped out of it. A little bit of profit right now, but just holding and waiting on this for now. Gold came very close to hitting our target. We did take some profits up here. We're still in a few positions. Gold is in an accumulation phase or a range phase now. There is a possibility that it could break back down below, and back down below these levels here. Watching it carefully to see if this just continues in a range, and looking for either a break up or a break down. It'd be nice to see gold come back, pull back here, but we may have a little bit further upside move before it does come pulling really back. Let's go ahead and look at the weekly on this, because it gives us a little bit better idea what we're looking at. So we're at a pretty good size level here. I'm just going to put that resistant level up right here. It's right around in this zone here. You see we have this wick here. The wick high sets right there. And then anywhere in between, we got a wick high that sets right there over just below that one before gold started to return to the downside. So we're going to put that right there. And we're setting right about those levels right now. So we have a range in here between 2072 and 1994. If we begin to roll down below this resistance here, you could take the wick, you can take the body, anywhere in here, and we'll just put another line here so we can identify it relatively quick here. If we begin to roll down below this level, and that sets about 1975, I'm going to go ahead and pull that last position off. But we're up in the rafters here. Again, high, extreme high is 2073. We're looking a little bit below that, but we could go up to there, but we're taking profits before that at 2050, 2054 area if it reaches that point. But that's what we're looking at for this. Again, it's a little bit rangy. We're going to stay at our current position. We're not going to add to this. I see this as kind of getting into a space of exhaustion. You see the resistance level here, hit here again. If we go up and hit it a third time and it doesn't break through, we could see some gold liquidation here. We could see a further move down in gold. Remember, if we do get something where the markets start tumbling, gold's going to be liquefied to cover margin, and we could see a pretty good size move down in gold if that is the case. If not, and we break through and hold above these levels, gold has a long ways to go, and we can get long and strong in gold. That's going to give us a swing out from here to here, and we got gold that's going to be pushing up to 2350 if we break out of this resistance zone. So we're getting close up there in the rafters. We want to take profits if they get up there. We want to hold light and see what happens here. That's the way we're looking at gold currently. One of the other reasons why we want to watch gold is because the 10-year is really starting to take off to the top side. I thought we would get down to these lows here, but apparently this held. It did not let us break through. The channel has now broken out, and we're starting to head topside again. Where this goes, I'm not really sure. We have several levels we can look at, but if we fib it here, I would suspect that if we want to keep it nice and tight, we look either at the 50 level, which is what 3.6, and see if it holds there. If it begins to roll over there, we'll definitely add to the gold position so it pushes higher up, because we're going to get a further pullback in gold if it does head up there. If it heads up to the 61 area, we will probably be out of gold. If this rolls over and starts heading down up there, then we would have to look to re-engage gold to the upside. But right now, 10-year moving up quite rapidly, so we're going to be very cautious on what we do with gold and just kind of stay keep on the one position, stay neutral, wait for if it breaks those levels we talked about. If it stops out, then we just will stay neutral till we see a change in the 10-year. The VIX is getting down to some pretty low levels here. Right now we're setting at current about 17. If we do get down to the 16 levels, I would really be cautious at that zone. I would expect VIX to start to move to the top side. I just don't see us having a scenario here where things look good. I think the leak that came out concerning the Biden administration, the Ukraine war, and other things, I think that was a planned leak. I think a 21-year-old or a 20-year-old, however, did not have access to those high-level documents. I think this is a planned setup, and it's planned to be able to soften the blow that's coming, which I believe is a Russian win over Ukraine. And I think that's just what is coming. Obviously, through these documents, we see several things that are surprising to people, such as we have troops in Ukraine. Whether that's true or not, obviously it hasn't been confirmed on the ground, but these documents say so. I just believe this is a planned leak. I don't see this as being something that just happenstance and some 20-year-old National Guardsmen put it on the internet. I don't think they have that much access to those high-level documents. It just doesn't add up. And how does the Washington Post get this information before the FBI? Really, please give me a break. Insulting to intelligence. So I believe that there's stuff going on that's going to rock and roll the coming days at the markets, and I believe that volatility is. I think we're just on the precipice of seeing some strong volatility enter back into the market. But as for right now, we could see as low as just below 16 or at 16 on this. But once we get down to levels, if we do get down to those levels, I would be very, very hesitant about being long stocks. Just FYI. Once again, dollar broke, but then it held below this support line right here, kind of like it did over here. But once again, it pulled back in over support. So what's going on here? Well, it's getting a little, I would say, pretentious to think that this could go down to our target of 98. It's getting a little bit tougher to confirm that now. What we would now have to see that we have broken that level, we'd really have to see a break below this right here. So break below 100.78 on dollar, then could give us more of a confirmation of a possible target down to 98 or 98 and some change, maybe 98.50. But until we break this now, this is the new, we're going to erase this because this is no longer valid. This is the new bottom in dollar for now. And we're going to hold tight on that. We're not going to add to this position. We're just going to hold tight on what we've got. We've got a few positions short still. If we start to garner a move that moves past some levels up here, looking at past 103 or so forth, we may just cut the whole thing off and stay neutral on dollar. Right now, dollar is not giving us an indication that it wants to come down to this 98.50 target. It's not. So we're just going to keep what we've got. We're not going to add till we get a solid break below this. Then we'll add strong to lever up down probably to about 99 and then exit dollar and just wait and see what happens after that. Here we have ES. Again, if ES breaks out, it's trying to, we're looking at it, but if it does break out and reaches around 43, I look at this as a false breakout. So I am long this still, looking to see if we can break. We're up against some pretty heavy resistance right here. You see it setting right in there. It's pretty heavy. It's down today, but just looking to see if we break that. But if we break that, there's a good possibility we could go up to near or at that 43 target. But if it does go up there, I believe it's just a false breakout. I think it rolls over, comes back down. Again, I don't see anything telling me a continuation to the upside. So we've been long since, back in October, we've had some bullish views. This has been not a strong bullish run. It's been full of back and forth. I don't know if this is just an accumulation for a strong breakout or if this is just a grind for a false break and then a crash into a bear market. I believe it's the up false crash into the bear market right now. If we do end up going past these levels of 4,300 and we start pushing up above here and closing above 4,300, like 4,360, 4,370, my bias may change at that point. But as of right now, I just don't see the fundamentals to get us going stronger and stronger to the upside. I don't see where they're coming from. I don't see where the liquidity is coming from. And in order to make markets work, you need liquidity. Everything I see is contraction. I see passive investors not strong in the market right now. I don't see, the Fed is pumping in some liquidity, but not massive amounts. Japan's not pumping in. China is starting to do some by lending more and lowering the standards to lending. But is that going to really transfer into a global lift? I mean, is China big enough to lift all boats? I don't think so. And they have still their own economic problems over there, which I don't believe are very far from being corrected. So allowing more lending over in China, is that going to lift things across the globe? I don't really think so. I don't think China garners that much power anymore as they used to over the global markets, because basically the model that China was following, Xiaoping and the CCP, has changed all that. It's not the same model anymore, and they don't do things the same, and they're not pro come to our country, we'll build it cheap and we'll ship it out. That's not the way China is thinking anymore. China is thinking of internal. It's thinking of building internally its strength and so forth, which I don't think will be accomplished that well, especially under the CCP, which is pretty much an organized mafia. So that's what I'm looking for, is a false breakout and then to the move downward. But we'll see. We've got to break this strong level here, 41.90. We get above that, 43 could be the target. So that's what I'm looking for as target to pull the trade. One of the trades I was into to the downside was dollar yen. It broke my resistant level. I got stopped out of that trade, lost about 200 pips on this trade. So on two positions, so down about 400 pips on this. So I am out of this. I'm flat. I'm not trading dollar yen right now, so I get an understanding of what's going on here. Does it still come down and hit target? Maybe. But in any case, if I stay flat and it does come down and hit target, if it does hit the 122 spot, I will definitely go long there on dollar yen at that point. So I'm going to stay neutral on it until it either gets down to that spot or until it breaks above this spot here. I'm going to put it at the peak there. I'm just going to call it 138. Closes above 138, I'll be long dollar yen. One of those two scenarios, I'll be long dollar yen. Pound yen, I took some profits here at the 166.20 spot. Now it pulled back a little bit. I have a couple more positions on, but pushing it up here, this saved me from my dollar yen trade. So up this over 400 pips on this right now. I'm looking for it again for these last two positions. 168.50 is what I'm going to call it. 168.50 is what I'm looking for here. And once that hits that area, I'm going to pull the rest of the trade off. But we did pull some positions here at this level because it's a big spot over here, big spot. We always look for the big spots. Want to be cautious there. Want to take some profit. But it looks like it's building up some mo to break out again, possibly reach our target. So we're going to hang there. But you can take, if it breaks out, you can take profit anywhere up in here. You don't have to wait for that level. I may not wait for that level. It just depends on if everything looks like it's got good mo to the upside. We can wait and take profit at that level higher. Euro Aussie was a grinding trade, but we're out of it now. Reach target here at about 1.63840. Out of this, not in it anymore. Very kind of an obnoxious trade. Wasn't real well pleased with it. I could have put these resources to other areas and done a lot better. But we did end up making 471 pips on 3 positions. Not bad. But again, like I said, it's not always that you're right on a position. It's, does this position make more for me than a different position? And in this case, this is a very grinding slow move. It was like trading Euro Swiss or Euro Pound. And it was just more so a waste of my time. Even though I was profitable on it, it was pretty much a waste of my time. I could have used those resources that I allocated to this position to different positions that would have garnered me much better returns. So it's not always that you're right on the trade and the trade works out. It's could I have, where's the best place to allocate my resources to gain the best return? And that's really what you should be looking for. And Euro Oz, even though I thought it would go there much faster than it did pan out. It wasn't, in my opinion, a very good trade. I'm going to wrap it up with Bitcoin here today. Bitcoin did hit our target, and we are out of Bitcoin. I do not want to be in Bitcoin right now. This area, let's bring it over here. And you see this was a high accumulation area, very congested, very choppy in here. We came up to the base of it and we broke through it, but we're now in that area of resistant levels in this very choppy range. I just don't want to be in Bitcoin right now. Where would I choose to go long Bitcoin? If we broke above this level right here and held above it at 32,373 would be where I would like to look to go long, or even more so above 30. Let's just call it close above 33,000. Then I'd feel comfortable hitting Bitcoin long again. Or if we held this bottom here and we started to push back up, then I could see possibly getting long there if I saw some momentum building in the move. But right now I'm just laying flat on this. I don't see it really taking off for a while, so I'm flat on the BTC. That about wraps it up for this week, people. Stay sharp. I see some ugly things coming in the future that we've really got to be careful of. Possibly next week, if we hit some of these targets, we could see a rollover. Just really be careful of that. And I see a lot of choppiness going into the summer months and possibly a very large down move coming this summer. So be very careful of being too biased on one side or the other. Stay nimble. Prepare to change on a dime. Don't get caught in a move that you can't get out of. So that's my caution to you. Take care. Keep an eye on what happens over there in Russia, Ukraine. That's a big deal. We've got a lot of other big things on the docket here. This bank crisis, again, like I said, is still not taken care of. It's still not there. It's improved, but the ugliness of it is still there. So watch out for these things. Take care, and we'll talk to you later.